Hello. Hey, good morning. Let's check out what the market is giving us today. So let's take a quick look. We have, all right, giving us today. So let's take a quick look. We have, all right, giving us today. So let's take a quick look. We have, all right, giving us today. So let's take a quick look. We have, all right, here we go. Right. So the market started down 100 almost. It's hitting our hourly. And so the market started down 100 almost. It's hitting our hourly. All right. Okay, how do you... So the market continues to weaken. We have a very important support level here where number 2 ends. This is the end, or this is the lowest part of this momentum that started here. So that has to remain unbroken for this trend to hold. So we're looking for some support on daily, the 200-day moving average. So we're looking for some support daily, the 200-day moving average. So we're looking for some support daily, 200-day moving average. So some support daily, 200-day moving average. So we continue to see some deterioration for the day, and we can try to spot some deterioration for the day. Maybe some support here, and try to spot some deterioration for the day. Maybe some support here, and try to spot some deterioration for the day. Maybe some support here. here we can see LABD, which is the short buy attack, that it's starting to ramp up again. Some of the momentum players coming in. There are some resistances, but then it reaches this level on the hourly. So we will see if that holds. And we see the VIX also, the hourly, same deal. See if it closes above it and confirms. Since this is our first video, this is pretty much just a test run to see how everything works. So we'll be for a little bit more, maybe another half an hour, and then we will continue again in the future. So can everybody hear me? Say hello if you're in. Hello, Louis. Glad you can join us. All right, so we're looking at the VIX. This is the volatility index. It measures the fear in the market. And as you can see, we've had a nice trend line. And now we can see that there are some resistances that could clear. And our momentum counter So the momentum counter, we're looking for this rally to continue until it prints a 9, which is basically the counter sequence indicator on Thinkorswim. And as this daily chart tries to print to a 9 before an exhaustion and the buying slows down, at that point we can probably start to see it try and hit this resistance levels to here, right around 22 and a quarter, 22 and a half. And that will give us a counter rally, and that's a possibility, especially with the market looking to roll over. We have seen the NASDAQ almost finishing up our 913, 9. These are the numbers we have to look at. The 9s and the 13s are where we can start to see maybe some sort of change in direction, change in momentum. So we'll continue to monitor how the markets react to some of the news that came out recently, as well as some of the banks. The financial sector has been weaker, and it should give us an indication. Let's see here. And this is the ETF, the triple leverage ETF for financials. And it is having a little bit of a hard time here to see if it can bounce its recent low. Does anyone have any questions? Excuse me. So basically, let's look at some of the indicators and parameters that we have here. So we use the 50-day moving average, which is the blue line. We use the red line, the 200-day moving average. With the 10-day, we have some stochastics. Obviously, looks very complicated. We can always clear things out, especially for beginners. And we have our MACD, stochastic, the Elliott oscillator from Thinkorswim, and we're also using the sequence counter that's available for Thinkorswim users as well. So a lot of these indicators are just averages, and where traders seem to hold support and resistance level, and we will discuss that furthermore if people have questions. Just to briefly talk about some of these indicators. To make it simple, the 50-day moving average is just basically an average of the prices, daily prices of the stock over the last 50 days, and that's encapsulated in this line. And that's where some of the initial support comes in. And then the longer term, a lot of the long-term investors use the 200-day moving average, which is more indicative of the longer-term trend. And for simplicity purposes, a lot of investors like to buy stocks over the 200-day moving average, and they like to sell stocks below the 200-day moving average. But those are just very simple explanations. The market seems to be coming back here a little bit. The Dow's only now down 30. So as we've said earlier, we might have some resistance. I'm sorry, support. And we can see that from the price perspective and the timing perspective. The 9 and the 13 is our timing indicator. It tells us the momentum of the recent buyers or the recent sellers. So this is what we call a seller setup, whereas the stock price goes higher. We're starting to see sellers come in, and this is called a buyer setup, 1 through 9. So now we might see some buying come in at this price level, and we'll see if it holds. For an example here, the first 1 through 9, just to make an example, this initial sellers came in, more selling continues right around the 200-day moving average or the hourly moving average. There are some basing out that happened, some buyers came in, and now these buyers that came into the market seems to be a little stronger than these sellers. So now as the price continues to get a little bit of a sideways move as we hit the 9, and another set of new buyers came in to disregard these sellers, and now we pointed over the last couple of days to some other resistances on the NASDAQ, on the daily, as well as the S&P. So we might see some support levels here, the 20-day moving average. If we can see that close above, that's a positive. Same thing on the hourly. There are some support levels that could be hit and could be held by the buyers and the bulls. But overall, this is a long-term channel that are now starting to develop, and Though the bear market seems unlikely at this point, we still have to make sure that the sellers are not as strong as we would hope it would be to drive a bear market down, to bring a bear market into the market. Give us a couple of minutes. We'll be right back. All right, we're back. And let's see what's going on. I believe we have some new viewers. So if you guys want to say hello, if you guys have any questions, please feel free. We'll be here for another half an hour till 11 o'clock. And we will continue on again tomorrow and the rest of the week. So here we're looking at the S&P, in the upper trend line. And there's a long-term trend line here that looks like it's going to stay for a while. And this is the previous trend line. The gray line is the previous line that we had a hard time breaking through. So it seems like there's a big battle here between the buyers and the sellers, as you can see. And from every other indicator, the MACD is starting to roll over as we hit this point. Stochastics overbought. So this area is a big area for the market. Even though this resistance level was broken briefly, the market can overshoot a little bit on either direction. So it's important to really understand and give some leeway. So we tried to break it here initially, but failed. And then the third time was a charm. Unfortunately, there are bigger resistances above it, so we're starting to see if there's a rollover. Again, I think this big rally for the market since the end of the year last year gives us an indication that a bear market might not be in the cards this year. I know a lot of people were afraid that we're getting to another recession, but with the Fed looking to pause raising interest rates, the cost of borrowing money, that bodes well for the economic cycle, for businesses to continue to grow, which is what we need. However, there are some issues that we still have to work through. GDP numbers are starting to slow down, given that we've raised rates over the last year, and that still has to be digested by the economy. And until the buyers and the sellers, supply and demand, finds that equilibrium, we can see where the market or the Fed would look to um, either pause or for this year, or maybe even cut if there's some serious slowdown. But so far, I think the market should be okay. Look at some other stocks. Let's look at some of these pot stocks. There are some deterioration that we have to keep out. The 913 buyers are basically, you can't see the buyers right now. It seems like they've gone in hibernation for a little bit. We'll see if there's some support here. The lows made back in February. Seems like the sellers are going to start to pick up some momentum here again as it breaks through the 50-day moving averages. The stock we're watching here, Huya, which is a Chinese company. We'll see if it confirms and settles here for a little bit for the next hour or two to see if we can hold this area of support. And if it does, this could be a good candidate for a swing trade. You can see we have some resistance level here, so trade between 24.25 to somewhere about around $29 a share, and to hopefully $35. So that's what we're looking for. That's part of our watch list. Does anyone have any questions? If you'd like me to go over any stock or the market, please let me know. We have roughly about 15 more minutes before we end our first in our trial. All right, hold again for a few more minutes. Be right back. All right, everybody, we're back. And looks like this Huya is starting to firm up. As you can see, the 9s and the 13s are basically where some of the prices tend to find support, especially right around the moving averages. Again, the 1 through 9 and the 13s are all timing indicators. So when the timing indicator and the price indicator starts to it starts to find a certain point, I think that's where we find the best places where we can uh, engage or disengage on any of these trades. Right. Let's answer some questions. Hi, Jonathan. Good morning. Yes, I will try to keep this available. Again, this is our first run, so I will keep the future um, videos up and running. But whenever you guys get a chance to subscribe, make sure you do so you'll know when I come back out here for some more live streaming. All right, so let's see some other trades out here. I know one of the bigger stories for the day is Tesla. A lot of people have been talking about this, especially with their cars coming out, the Model 3. This has been a very long-term choppy stock for, I would say, the last year or so, since the stock hit a high of 389. Going back on what's this? This is going back in 2017. So we've had about a multi-month consolidation. We have a rectangle pattern here. Everyone can see it. This has been the rectangle pattern that the stock has been consolidating in for about almost 2 years, and we'll see how it holds. There's a lot of bears out there right now on the stock. Now we're looking at the weekly moving average. We'll see how the stock is acting on the weekly basis and also the monthly basis. Let's get rid of this for now. So normally when we do there's different time frames for different trades. So just to give you an example, when we do day trades, we normally go from 1 minute to hourly time frame. And when we do our swing trading, we go from hourly to daily. And then for the long-term investments, we do daily to monthly. So if this was a long-term investment, let's say Tesla, so you've seen the 1 through 9. These are the long-term buyers that came in and basically pumped the stock all the way to its high. And now we're starting to see it consolidate. But as long as the 1 holds, the long-term trend continues to hold. That's going to be the main support level. But again, that's still pretty far off. So we can just start off from where we are now. The last couple of months have been negative. As you see, the 1, 2, and again, we can surmise that if this starts to hold up here, that number will cancel out. Each number is derived using the indicator that they have on Thinkorswim. Each number is derived. For an example, this one is higher than the closest 4 months ago, 4 bars ago. Okay, so that's how the numbers derived from 1 through 9. Number 2, printed because the last 4 sessions, 1, 2, 3, 4, was lower than the close of this number 2, and so on and so forth. All right, so we will get into that a little bit more. Again, this is just a start of our videos, so we just wanted to see how everything works, and we want we want to welcome you to our channel, and hopefully you keep coming back to get some more actionable information. Now, as we go for more details, we go to the weekly, and here there are some support here. So it's possible that over the next couple of weeks, 3 weeks, this could be just a basing up process here to hold this level of support. Okay, so we'll see how Tesla reacts over the course of the next couple of weeks. On a daily, again, we want to finish to the 9. As you can see, 9 and 13s are turning points, it seems to be. There are rules around it, so we'll get into that as we go along. An hour is a very short period of time to teach or show people how it works. We're really just providing a 1 hour video for everybody to just see how the market's going, how our indicators are reading it, and how that could help you as an investor and as a trader. So we are at 7 here now in the count. So we're looking for a couple more days of a negative trend to continue. The most important part here is this support level, or this past the recent one. Obviously, there's a big support here. I mean, everybody can see that. Okay, so you might see a little bit of an overlap, even though this one is being tested. The bottom of this one, that's really where we want to first see how the trend, where the trend stops. And unfortunately, it is being broken, and we want to see if it closes below the low of 1 to negate these buyers. These buyers, we want to see if this set of buyers are negated by the new sellers that are coming into the market. And there will most likely, in the short term, see some support level, as you can see here. One time back in April of last year, there was some support. Then again, in October of last year, there was some support. And now, as we go through the first quarter, it looks like this is where the next battle is for the long-term trend. The short-term, the daily trend, like I said, the 9 here printed. The good news is these batch of sellers were overrun by these batch of buyers. So you still want to see how this will hold in the next few days. These buyers should, if they're strong enough, should be able to overpower the sellers and turn the stock back around to try to get back to this this pattern, which is, again, like I said, the rectangular pattern. The rectangle pattern is pretty strong. So we can see this stock, if it holds the 9 here and buyers do step back into the stock, we can see that there is still room for this thing to run back to above the 375 level. All right, so until the trend is broken, the trend is our friend. That's a very famous saying in trading. The beauty of this indicator is that it's applicable whether you're an investor or whether you're a day trader. It also is a very good indicator for options, for commodities, for currencies, etc., etc. Just to give you a perfect example, some of these options that we had a long time ago, that we traded a long time ago, some of them you can see the numbers of how they did. And as you can see, if you bought the puts, I mean, these are calls, but if you bought the puts, or sold the calls at $3.34 within 9 days, you basically made 100% of your money. Okay, Cron, looks like there's some support here. This is another marijuana stock. And we have 2 more minutes. So if there's any other comments that you guys would like to share, please let us know. And don't forget to subscribe to our channel. right. What else? What else should we talk about? Start with the VIX. Let's look at the interest rate index, 10-year Treasury index. Here we go. We have been crashing down, and that means that people are buying bonds, which means people are afraid. They're going for a more conservative outlook going forward. So that's a telltale sign that maybe we see a bit more of a correction in the market. So that's something you have to see. All right, we're pretty much going to end this call now, or this web stream. I thank everybody for coming in and participating, and we hope to see you soon. Thanks again. If you have any questions, feel free to check out our website, StockQB.com, and give us any feedback or ask us any questions, and we'll be more than happy to help you as much as we could. Again, thank you so much, and we'll see you next time. Bye-bye.